Hey traders, Raghee here, and in this recap video I'm going to take you through the energy complex, the crude oil, heating oil, and unleaded gas trio. Now we've had our eye on all three for the most part throughout the early part of November, but there's a few things I want to point out. Unleaded gas was the first one to lose the clarity of the wave, and when crude oil and heating oil were punching up to higher highs or testing previous highs, unleaded was only really able to make about a midpoint retracement. In other words, when I take a look at the high to low here, it was only able to make a halfway retracement when heating oil and crude were up in here. So I immediately knew back at that point, this would have been on the 27th, 24th, 27th of November, that this was a laggard. So for that reason, we removed it from our watch list and we're focusing on mainly crude oil and heating oil. So that's the first lesson. When you're looking at a complex, at a sector, and you see a laggard or a leader, make a mental note of that. In this case, I made a mental note of the laggard because I'm interested in getting long. We got long crude, and we have been long crude, and we took a little bit of heat yesterday. We're pretty much back at more or less unchanged at the moment. And I'm looking for crude not to make a higher high, but simply retrace perhaps to about the 57.95 area, and then after that, as a second target, up to about the 58.90 area. So stepping out in front of both the double zeros, because those double zeros, those whole round numbers, 58.00 is oftentimes where you're going to see the sell orders stack up. It's just the nature of order flow. People love those whole numbers. Heating oil is really interesting, and this is really what I want to share with you guys in this recap video, and this is also going to serve as a trade management video for those of you that are in this play from the other day. So this went out, I believe, as an alert, and it was an interesting alert in that, one, we had lost the validity of the trend. So the first lesson of any kind of trend break or transition is that a broken uptrend is not a downtrend. A lot of people minimize the markets to two directions. It's either moving up or it's moving down, and 100-year-old Charles Dow theory will tell you there are actually four trends. Up, down, sure, but there's a sideways choppy and there's a narrow choppy. Accumulation and distribution or congestion and consolidation, but there's two kinds of sideways markets. The kind we get after a trend is broken is the choppy variety. So then we do what I call respect the trend that was. And what we did in heating oil was we did respect the trend that was. We respected the fact that this is likely not a downtrend, but an oversold market. There's two ways we did this. One is you can simply buy the low, but two, you can look for an intraday trend reversal. And that was really what we were looking to do. Take advantage of the intraday trend reversal and give it enough latitude so that if we did see that reversal on a short term 5 or 15, we would be able to get long with momentum and stay long because we are working with the overall direction of the market. And that's how we ended up with a very nice move to the upside in heating oil. So really looking at an 86.05 to 86.25 level, you know, we're sitting at 89.56 right now. That's $1,400 per contract. Okay, that's about a 1 3/4% return today after on a fill we took yesterday. Not too shabby. I'm still looking for the 191 handle, and I'll talk more about the energies, non-farm payroll, and what I see right now. I am an index futures NQES and YM bull. I'll talk about levels I'm watching for tomorrow's non-farm payroll in the premium update.